Well, it was a mixed trading session in the fixed income market yesterday as investors digested the bond auction results. The overnight lending rate stayed flat at 14% in the absence of any significant funding pressure on the system. Activities in the Treasury bills secondary market were mixed as the average yield was unchanged at 4.6%. Starting in the bond space, investors were largely bullish across the curve as yields on benchmark bonds dipped 3 basis points on average. Of note, the yield on the 16.2499% FGN April 2037 paper erased 14 basis points to settle at 12.6%. Meanwhile, it was another bearish session in the OMO space, where yields rose 45 basis points on average. Investors sold off tenors at the long end of the market. And finally, in the Nigeria Treasury bill space, the bulls came out on top as yields eased 5 basis points on average amidst sell-side action at the short end of the curve. Well, joining us to make sense of this is John Kanayo, the Head Research and Strategies, Imperial Asset Limited. Hello, John. Good to have you join us today.
Yes, good morning, Perpetua, and thanks for having me this morning.
As always. Well, tell us about what to expect. The fixed income market kicked off the new trading week on a mixed note following sell-side action across the open market operation and bond space. Help us make sense of this, and why was this so?
Like you said, fixed income kicked off the trading week with a mixed trend. System liquidity was marginally up. It settled at 136.47 billion compared to 60.52 billion at the end of Monday trading session. Money market, like you have pointed out, core rate or overnight rate was flat at 14.0%. Open repo rate was equally flat at 13.75%. You come down to OMO market. OMO market was bearish. There was we saw sell-off at the mid and long end of the curve, particularly 21 February 2023 and 2nd May 2023. For February 2023, average yield was up by 41 basis points to settle at 5.30%. For May 2023, average yield was yield was up by 127 basis points to settle at 5.74%. Overall, average yield in OMO market was up by 14 basis points, 41 basis points to settle at 5.01%. The NTV market, like you mentioned, it was equally the sell-off a bearish hit in this end of the market. We saw sell-off at the mid and long end, particularly April 2023 and October 2022.
Okay, let me come in here. All right, go ahead.
Average yield was down by 5 basis points to set up at 4.61 basis points.
All right, now
talk. You want to come in here?
Yes, I'm here right now. All right, I'd like you to talk to us about the activities in the money market space. Now, what's the current rate in the interbank segment of the market, given the execution of the new CBN's adjusted benchmark rate?
Can you repeat your question again?
All right, so I was asking you that you should tell us about activities in the money market space. What's the correct rate in the interbank segment of the market, given the execution of the new CBN's adjusted benchmark rate? How is it affecting? Yes, go ahead. Okay.
Like I pointed out, overnight settled at 14.0% or 14%, and that's a high rate position. If you remember, couple of days back, it was between 5 to 7%. It has gone up to 14%. Like I have always pointed out in this show, I have always said where you see significant liquidity what we usually see, we see overnight rates or money market rates coming down due to surfeit in liquidity. Where we have that in liquidity, we usually see overnight rate come down. If you want to look at it against the MPC hike of MPR by 150 basis points, I think over time market has reacted to it gladly in the fixed income market, not in the money market, because money market is actually a transaction between financial institutions. It's driven by liquidity availability. But if you're talking about the MPC decision to push NPL, that has been reflected in the NTB and the bond market. We have seen over time bond yield going up in response to this, and equally adjusting towards the last month auction that was held on Monday. If you permit me, I have not. I think I can quickly go through the secondary bond market as of yesterday.
Please go ahead. Yes.
Okay. At the bond market, activities were bullish. We saw demand coming in at the short end, mid end, and long end of the curve. At the short end, average yield was up by 3 basis. Was down by 3 basis, 2 basis points. At the mid end, it was down by 3 basis points. At the long end, it was equally down by 2 basis points. This shows that demand came in across its 3 ends of bond market. Overall, average yield was down by 3 basis points to settle at 11.55%. I pointed out bond auction that was done on Monday. If your time will allow me, I can quickly.
No, I think that's a good one. I think we've had a good one already. All right, so I said I think we've had a good one already. I mean, breaking down all that was a very good one. Can you just give us your outlook for the week, briefly, so we'll wrap up on that note? Okay.
For normal market, we are expecting that there will be sell-off in this part of the market, obviously, because yield is still significantly low. If you put it against inflation number, then at the NTV market, we equally expect that there will be a sell-off like what we witnessed on Tuesday today. The bond market, for the fact that DMO has really shows government interest in bond yields by pushing up the 3 maturities that were offered on Monday, pushing the basis point up. Market actually traded on this information yesterday, and we expect bullish activities to continue in the bond market today, both at the short, mid, and long end of the curve.
All right. Thank you so much, John Kanye, for coming on the show, and thanks for your thoughts.
Liquidity is
John Kanye, I think this is a good place to anchor. Thank you so much for your thoughts and analysis.
Thank you, Professor, for having me, and thank you, everyone, for listening.